And we resume problem 2, parts G through J. Now, part G does not say that you specifically have to set up an accounting equation, but it will make your life considerably easier. So let's go through and fill in the numbers that we have from the prior documents. If you remember, our cash was $800, our land was $3,500, our notes payable was $600, our common stock was $1,000, and our retained earnings was $27. And again, just to remind us that those are numbers were given and shouldn't be fussed with, I'm going to highlight them in yellow. Stay away from them. Don't fuss with them. Now, they tell us throughout the ensuing period, the company had a couple of things happen. First of all, they earned $1,800 in revenue. They didn't tell us anything different, so we assume it's $1,800 in cash. And remember, this is the double entry system of accounting. So we have to say what we got and where it's ultimately going to go, and it's ultimately going to go to retained earnings. Then we paid $1,200 worth of expenses. And that also is a reduction to retained earnings. Remember our little funnel picture? And then we pay dividends to our owners. Not an expense, giving back some of our earnings to our shareholders. $500. So this is an expense. This is a dividend. This is revenue. Now let's total up our new numbers and see what we come up with. For cash, we come up with a total of $900. Land, nothing happens. Nothing's happened to our note payable. We haven't borrowed any more nor paid any back. We have not issued any additional common stock, but these various transactions of $1,800 in and $1,700 out have increased our retained earnings balance to $2,800 at the end of the period. They don't really ask you to do that, but it just makes life easier because now you can go through and prepare the rest of the financial statements. So the next financial statement that we're going to prepare, and it's always the first one that we prepare, is the income statement. So we have revenue of $1,800. We have expenses of $1,200. So our net income for the period, it should be black or green, $600. Now I'm using colored pens just to make things easier for you to see. In the real world, all accounting is done with black or blue ink. Okay. In the old world where I started, you used to use red ink, but that's going the way of high button shoes, which none of you have probably ever even seen. So, the next thing it asks us to do is take a look at the total change in stockholders' equity. And you've done this before, and I know you're thinking, oh man, this is more of an accounting course than I wanted. I'm getting all the accounting stuff out of the way up front, so when we get through the first couple of chapters, we can get to the stuff that you're really going to need for your businesses. Okay, so our beginning common stock, if you remember, going back to this, it's $1,000. We issued no common stock, so our ending common stock is exactly the same as we started, $1,000. Now, retained earnings, we do have some, because we had beginning retained earnings of $2,700. We had some net income of $600. We gave out dividends. In other words, we gave out some of that income. As a matter of fact, we gave out damn near all of it. We gave out $500 in dividends, so our ending balance in retained earnings is $2,800. And our total stockholders' equity, the common stock and the retained earnings, $3,800. And if you want to just double check, take a look over here. Common stock, $3,800. Yep, we're good to go. 38 and 6 would be 44. 9 and 35 would be 44. So all of our balance sheets do indeed balance. The next thing it asks us to do is to produce a balance sheet. Well, that's basically what we did already when we did this. So let's take a look, and let me get my notes again so I don't write down stupid numbers or say even more stupid things. Working from this, we're going to basically just take those numbers. So our cash is $900. Our land is $3,500. Our total assets are $4,400. That was our computation. Now we're going to look at our liabilities, and that's still $600. Remember, we borrowed $600. We neither paid nor borrowed more. So our liabilities, our notes payable, are $600. Our stockholders' equity, our common stock, is still $1,000. We haven't changed that. And our retained earnings, $2,800. So our total equity is $3,800. Total liabilities and shareholder equity, $4,400. And our internal check, do our total assets equal our total liabilities and equity? And indeed they do. So, sorry, my pages are all sticking together here. Now it asks us to take a look at the cash flows. Remember, this is cash that comes into or goes out of the business based on operating activities, doing what we do, based on investing activities. If we buy property, plant, equipment, stock of another company, bonds of another company, all of those things are investing activities. And our financing activities go to our capital structure, our stock, our bonds, our mortgages, our notes. So let's take a look. We're told that we had $1,800 cash receipts from customers. Remember that? They told us we had $1,800 worth of revenue. That's sales, receipts from customers. And we had $1,200 worth of expenses for operations. How do we know they're for operations? Because they're expenses. It's what it cost us to do business. So our cash flow from operating activities, $600. Cash flows from investing activities is $0. We neither bought nor sold anything. No new property, no land, no equipment, no nothing. Cash for financing activities, we didn't sell any stock. We didn't take any new mortgages. We didn't sign any new notes. All we did was we gave $500 in dividends out to our shareholders. So our cash from financing was $500 out. So we had $600 total in and $500 out. Our net increase in cash was $100. Our beginning cash balance, remember that from way back whenever, was what, $800 was our beginning cash? Yes. Beginning cash was $800. Our ending cash balance was $900. And if you want to, you can go back and check your equation. What's our ending cash balance? $900. So what I'm hoping you're getting a feel for is that all of these statements kind of link together. They all kind of hold together, that they relate one to the other. Okay. The next two things, they're asking us some questions. One of the questions they're asking us is, what is the proper terminology? And we can sort of cut to the chase for this, okay? The income statement, the statement of changes in stockholders' equity, sometimes called shareholders' equity, and the statement of cash flows cover a span of time, and therefore when you use them you say for the year ended. That's the important part. You could also say for the year from 1/1 whatever to 12/31 whatever, but that's kind of an old way to do it, okay? Now the balance sheet, that's a little different animal, because the balance sheet explains just where you are at a specific point. So therefore you say these numbers were correct on this date. You're not giving any other date. Then they ask us about what happens when the land goes up in value. Nothing. Okay? And the balance in the revenue account is 0 on the first day of the year, because you've transferred all of that to retained earnings. That's the funnel thing we did. That's transferring it to retained earnings. That's closing the books. That's getting ready for the next year. That's hitting the reset button. exercise 121 in the book, problem 2 on your assignments. Long problem. I promise most of the others are not this long.